Investing in stocks, bonds, and mutual funds is a great way to grow your wealth over time. Here are some investment strategies for beginners to get started with each of these asset classes. Stocks. Investing in stocks can be intimidating for beginners. But it is important to understand that the stock market has historically provided the highest returns over the long term. Here are some tips for getting started with stocks. Research stocks. Start by researching different companies and industries to get a better understanding of which stocks might be a good fit for your investment portfolio. Look at a company's financials, earnings reports, and news articles to get a sense of how it is performing and whether it is a good investment. Diversify your portfolio. Don't put all your eggs in one basket. Invest in a mix of stocks from different industries and sectors to spread your risk and maximize your returns. Consider investing in index funds or ETFs. These are diversified portfolios that track the performance of a particular index, such as the S&P 500. They are a great way to invest in a broad range of stocks without having to do extensive research on individual companies. Bonds. Bonds are a type of investment that provide a fixed income stream over time. They are generally considered to be less risky than stocks, but also offer lower returns. Here are some tips for getting started with bonds. Understand the different types of bonds. There are many different types of bonds, including government bonds, corporate bonds, and municipal bonds. Each type of bond has different risk and return characteristics. So it's important to do your research and choose the right type of bond for your investment goals. Diversify your portfolio. Just like with stocks, it's important to diversify your bond portfolio to spread your risk and maximize your returns. Consider investing in bond funds. Bond funds are similar to index funds in that they are diversified portfolios that track the performance of a particular index. They are a great way to invest in a broad range of bonds without having to do extensive research on individual issuers. Mutual funds. Mutual funds are a type of investment that pools money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other securities. They are a great way for beginners to get started with investing because they offer diversification and professional management. Here are some tips for getting started with mutual funds. Understand the different types of mutual funds. There are many different types of mutual funds, including equity funds, bond funds, and index funds. Each type of fund has different risk and return characteristics. So it's important to do your research and choose the right type of fund for your investment goals. Look for low-cost funds. Mutual funds charge fees called expense ratios, which can eat into your returns over time. Look for funds with low expense ratios to maximize your returns. Consider investing in target date funds. Target date funds are a type of mutual fund that automatically adjusts the mix of stocks and bonds as you get closer to your retirement date. They are a great way to set your investment on autopilot and let the fund manager take care of the rest. In summary, investing in stocks, bonds, and mutual funds is a great way to grow your wealth over time. By doing your research, diversifying your portfolio, and choosing the right types of investments, you can maximize your returns and achieve your financial goals.